Good morning, everyone. Today, we're diving into a concept that shapes our daily lives, our workplaces, and even the future of our communities: productivity. Productivity is a word we hear a lot, but at its core, it's simple. It's about getting more done with the same effort. Whether you're at a desk, on a factory floor, or working from home, productivity is about making the most of your time and resources. Imagine baking more cookies in the same amount of time. Your productivity just went up. It's not just about speed, but about finding ways to improve your process so you can achieve more with less stress. In economics, productivity measures how efficiently we produce goods and services, usually as output per hour of work. It's a key indicator of how well an economy is functioning. When productivity rises, it means we're making more with the same resources, often thanks to better tools, smarter methods, or new technologies that help us work more efficiently. This is crucial because higher productivity is the foundation for a stronger economy. It drives growth, creates opportunities, and helps businesses stay competitive in a fast-changing world. It allows businesses to pay workers more without raising prices, leading to higher wages and stable costs for everyone. This means families can afford more, and businesses can invest in their people. Productivity growth is what lets our standard of living improve over time. It's why we have better homes, more choices, and access to new technologies that make life easier. Without it, any economic gains are just temporary. Stagnant productivity can lead to fewer opportunities and a lower quality of life for everyone. It's the difference between working harder and working smarter. By focusing on productivity, we can unlock new potential in every part of our lives. That's why news of a recent jump in America's productivity has sparked so much hope. It signals progress and the promise of a brighter future. Understanding productivity isn't just for economists, it affects all of us, shaping our jobs, our paychecks, and the opportunities we have to build better lives. To see why today's productivity news is exciting, let's revisit the 1990s and early 2000s. Back then, U.S. productivity soared, growing at nearly 2.8% a year, a superstar performance in economic terms. The driving force? The rise of personal computers and the internet. These technologies revolutionized how businesses operated, making information sharing and task automation faster and easier. Every industry found smarter ways to work, from booking flights online to managing supply chains. This tech-driven surge created millions of jobs and raised incomes. The result was a cycle of higher productivity, rising wages, and stable prices. A golden age of prosperity. It set the standard for what's possible when innovation is widely adopted. Now, as we look at today's data, the big question is, are we on the verge of another transformative era? Could we repeat that incredible success? That's what has everyone watching the numbers so closely. After the explosive economic boom of the 1990s, productivity growth in the United States slowed dramatically, leaving many experts puzzled and concerned about the future. From 2006 to 2019, productivity growth averaged just 1.5% a year, a sluggish pace that made it harder for businesses to grow and for workers to see real wage gains. During the pandemic, it dipped even lower, as offices emptied and uncertainty reigned. But in late 2023, something remarkable happened. Productivity suddenly jumped, soaring to a 4% annualized rate, far outpacing expectations and reversing years of stagnation. The last quarter of 2023 was especially strong, with a 3.2% increase that caught economists and business leaders by surprise. This surge was both unexpected and welcome, injecting new optimism into boardrooms and break rooms alike. What's truly remarkable is that wages were rising at the same time, but businesses didn't have to raise prices for consumers, a rare and positive combination. In fact, unit labor costs actually fell, meaning companies could afford to pay workers more without passing those costs on to shoppers. This is a sign of real efficiency gains. This is the economic sweet spot: growth, higher pay, and low inflation all happening at once. It's a rare alignment that benefits nearly everyone. It's the scenario policymakers dream of, and one that could set the stage for a brighter economic future if it lasts. The big question now is whether this is just a temporary burst of productivity or the beginning of a new era of sustained growth and prosperity. The stakes are high, and everyone, from Wall Street to Main Street, is watching closely for signs that this trend will continue. The answer could shape the direction of the economy for years, or even decades, to come. The recent productivity spike has sparked real optimism. Many economists and Federal Reserve officials believe we're at the start of a new productivity boom. They point to artificial intelligence, AI, as the next game-changing technology. AI is already transforming how we work, communicate, and create, but we've only scratched the surface. The pandemic accelerated digital adoption, forcing businesses to innovate and become more efficient. Now, with AI tools, companies can make even bigger leaps in productivity. Optimists see the recent data as proof that this transformation is underway. If they're right, we could be entering a cycle of strong growth, rising wages, and low inflation. That would be fantastic news for everyone. When it comes to a new productivity boom, AI is the star of the show. It's not just a buzzword. Artificial intelligence is rapidly becoming a driving force behind how we work, create, and solve problems. Unlike the internet, which connected us and made information accessible, AI helps us understand and use that information in powerful new ways. It can sift through mountains of data, spot patterns we'd never notice, and offer insights that help us make better decisions, faster than ever before. AI can analyze medical scans to help doctors diagnose diseases, write code alongside software engineers, run entire factory production lines with precision, and answer customer questions around the clock, acting as a super assistant, not just a replacement for human workers. We're seeing the first wave of tools like ChatGPT and other generative AI apps, but this is just the beginning. The technology is evolving quickly, and new applications are emerging every day. As businesses learn to use AI and integrate it into their workflows, the potential for productivity gains is enormous. Companies are rethinking how teams collaborate, automate tasks, and deliver value to customers. Of course, it takes time for new technology to spread and make a real impact. Adapting to change isn't always easy, and organizations need to invest in training and infrastructure. Economists call this the implementation lag, the period between when a technology is introduced and when its benefits are fully realized across the economy. The internet took years to boost productivity. It didn't happen overnight. AI may follow a similar path, gradually transforming how we work and live as adoption grows. The hopeful view is that we're at the very start of that process now, with the groundwork being laid for a new era of innovation and growth. Investments are being made, workers are learning new skills, and the recent numbers could be the first sign that the AI revolution is starting to pay off in real, measurable ways. If so, the future could be very bright, full of opportunities for those ready to embrace change and harness the power of AI. But it's still early days, and the journey is just beginning. Not everyone is convinced this is a lasting boom. Some economists warn that the recent surge could be a temporary sugar high from unusual post-pandemic conditions. Businesses, short on workers, squeezed more out of existing staff, boosting output per hour, but this effect may fade. Looking at the bigger picture, average productivity growth since 2020 is still sluggish. Skeptics say we need more than a few strong quarters to declare a new era. They also question whether AI will deliver broad, lasting gains, noting that past tech breakthroughs often took longer to pay off than expected. The benefits might be limited to a few industries or take years to spread. For now, the cautious camp urges patience before celebrating a new economic miracle. Skeptics focus on the business cycle, noting that productivity often spikes during economic recoveries. This could be a normal rebound, not a new trend. They argue that AI's impact on the overall economy is still small, and that it takes time for new technology to move the needle. The recent productivity gains may have come too soon to credit AI. Another concern: many new jobs are in sectors like hospitality and healthcare, where productivity is harder to boost. It's easier to automate a factory than a care job. Extraordinary claims need extraordinary evidence, and skeptics want to see a longer, consistent pattern of high growth. Until then, they remain unconvinced that we've broken out of the slow growth cycle. The debate continues. Why does this debate matter for you? Sustained productivity growth is one of the most powerful forces for improving your financial well-being. When companies become more productive, they can pay higher wages without raising prices. In a high-productivity economy, rising pay becomes the norm. This means more money for your family, savings, and a better quality of life. Strong productivity growth also helps keep inflation in check. When businesses produce more for less, they don't need to raise prices as much. This creates economic stability and helps avoid painful recessions. Higher productivity grows the economic pie for everyone, supporting innovation and better public services. Whether you're an optimist or a skeptic, the stakes are high. The path of productivity will shape the nation's economic health and your household security. That's why everyone is paying attention. The U.S. economy is at a crossroads. After years of slow growth, a sudden surge in productivity has sparked a crucial debate. Optimists see this as the dawn of a new golden age, driven by AI and innovation. Skeptics warn it could be a temporary blip, not a lasting trend. The outcome will affect everyone: our jobs, wages, and future opportunities. If the optimists are right, we could see a return to strong growth and rising living standards. If not, we may face more years of slow progress and tough choices. As of February 7, 2026, no one knows for sure which path we're on. The only thing certain is that the story is still unfolding. The future of American prosperity depends on what happens next.